of a very large player, that is Grasim.
Okay, so we have the volume growth here. The decorative business registered volume growth of 10% according to the press release, with a revenue decline of 1.8% in Q4. And as per the poll that we have in terms of what was expected, the decorative paints was expected to see a double-digit growth in terms of what we were expecting this time. It also suggested Kansai, the other player in the industry, reported double-digit growth. So that is what was expected for Asian paints as well. It has been a double-digit growth to the tune of 10%. The net profit is slightly lower at 1,275 crore rupees. The management says revenue was impacted by weak demand conditions and down trading, and Q4 also saw price cuts across product categories, suppressing revenue growth. So something that the industry was fearing, there could be price cuts, that has come by. Volume growth largely at the double-digit mark.
Largely along the lines of what the management has alluded to. Price cuts. Now, this is something that the market was fearing, the analyst community was fearing. The entry of a large player, there were worries that there could be price undercutting, and that seems to have played out in Q4. It'll be important to note, what is the company saying in terms of FY25 guidance as well.
In fact, we have Naveen Kulkarni, who's joining us now to analyze these numbers. Naveen, good afternoon. Thank you so much for joining us. Well, it looks like a miss, at least on the top line. Revenue has come in at 8,730 crore rupees versus a poll of around 9,000 crore rupees. The volume growth is at 10% versus a poll of 8 to 10%. And what the management says is that there was some down trading and also price cuts. What do you make of these numbers?
Yeah, so clearly there is a miss on the revenue. So there was an expectation of around 4% kind of a price cut. So we were expecting revenues to still grow by around a couple of percentage points over the last year. So expecting revenues in the range of around 9,000 crores. But this is a miss of almost around 300 crores on the revenue. We need to closely look at the EBITDA numbers because EBITDA margins are important. So we were looking at EBITDA of around 1,900 crores. So that is a critical number.
The margins are at 19.4%, Naveen. The margins have come in at 19.4%. What were you factoring in?
So we were looking at a higher number, more than 20%. So this margin number is also a miss on our expectations. So both revenue as well as there is a miss on the EBITDA. Considering, of course, the volume growth has been 10%, but revenues have been flattish on a year-on-year basis. So clearly, the margins seem to have been under pressure.
We also have Prakash, Diwan with us. Prakash, the margins that we were working with were close to 21.5%. So our colleague Mangalam was working with margins of close to 21.5%. So it seems to be almost a 200 basis points miss. What is it that you're attributing this particular margin miss to?
So, Vivek, I think we need to understand that they've had some sort of a price cut, just given the competitive intensity. So this was bound to happen. I was personally not very, high on expectation of margins to be so robust because, they have been preparing for the Grasim launch, and that's something which would kind of definitely impact, the way they're able to pass on, especially the trade margins. You have to leave much for the distributors so that they don't find it worthwhile to switch to the new player that's come into the market. So it's very clear phase of transition for them to battle the competition that's come in. So quite understandable, actually.
Okay. The management also says, looking ahead, we remain confident about a pickup in demand conditions with a favorable monsoon forecast. We'll continue to innovate with speed and invest in our brand, focusing on our consumers and keeping their interests at the forefront. Naveen, they have indicated that demand conditions were weak, there's down trading, then there are price cuts as well. What are you suggesting the outlook is from your end, considering there is a big player which has entered the industry? Do you think price cuts could continue, margin pressure could continue going forward?
So at this point in time, it seems likely that the margin pressure could continue for some more time because of the intrinsic conditions that we are experiencing, right? But of course, if the demand picks up, then the chances of a company like Asian Paints to charge higher prices is, of course, always there. Competitive activity, of course, we'll need to monitor that more closely as time passes. So we'll see how that impacts. But as of now, the case of margin pressure, I think, is likely to be there for a couple of more quarters.
Well, interestingly, despite the weak set of numbers, the stock seems to have recovered from the intraday lows. Prakash, one thing that we want to highlight, and Mangam's also made a note of this, that the company itself had indicated that the medium-term EBITDA margin guidance is 18 to 20%, and the company was confident of a double-digit growth as far as volumes are concerned in Q4. It's given exactly 10%. Now, going forward, also keeping in context oil prices, how do you expect a margin band to trend?
Oh, so that's a very important point. If volume growth keeps coming up at a healthy double-digit, Vivek, margins could possibly, the company definitely has levers to move margin up if once competitive intensity subsides. And that probably is going to be timed with, people actually utilizing the Grasim Opus product and the distribution muscle that they would unleash. Once that stabilizes, I'm sure Asian Paints, given its superiority in terms of product experience, usage experience, will be able to, get prices back to slightly higher up. The oil element is, of course, there, but usually we've seen they've been able to kind of manage volatility on that side with superior inventory management. So it might not be such a big deterrent. But yes, you're right. If oil plays spoiler, then definitely, even the raw material side kind of gets impacted, but which has not happened in this quarter so dramatically, I'm sure. We'll, of course, wait for the management comments on that.
Yeah.
And remember one thing, Asian Paints also has a far wider product mix and array to battle the competition. So wherever they face head-on competition from Grasim and some of the other players, they could actually move things in a favorable way on the other side. So that's where the aggregate margin profile might not be as bad. And if it inches up back to that 20% kind of a zone with decent rise in volumes, it could get its mojo back. So I think that's what the market probably is also anticipating.
Okay, all right. So weak numbers from Asian Paints. It's been a top-down miss, especially on the margin front. So if you've just joined in, this is what the Asian Paints Q4 earnings look like. The management says it is because of lower demand and some down trading that they saw in the premium segment, but they did see a volume growth of around 10%. We'll do one thing. We'll thank you, gentlemen, for joining us, by the way, with that analysis. But we'll slip into a short break. When we come back, we'll talk more about stock-specific news and the outlook as well. Stay tuned.